Hi guys, how are you doing? Okay guys, it is nice to see you. The weather is really rainy today, so it's probably the best time to stay at home and analyze few stocks, right? Okay, today we're going to cover a couple companies, but before we do it, as usually disclaimer that you need to understand that this masterclass is for education purpose only. Okay, even we cover the companies I don't take into consideration your personal situation. So you have to decide yourself. So if you like this company, if you don't like this company, if you want to invest in this, it's totally your opinion. Even we discuss some strategies and etc. 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 Okay, uh, please put the plus that you understand this point that it is important. So that's because it is your money in the end, and you invest them. So and you have to think before you do it, even though it doesn't really matter who says what. Okay, so that's an important one. All right. So we're going to cover current market valuation and what we can expect from it. Then we'll look at the apparel industry and not hard lines. It's from the previous. And then we'll look at two companies. One of them is included in this apparel industry. It's Michael Kors Holding, ticker Kors. Also, we look at Signet Jewelries. We discussed already at our group when we met in Redfern last month, but few people asked to do it online because they missed that club meeting and they're quite interested in that company. So that's why I decided to put it today. So our masterclass is going to be a bit longer today because we're going to cover two companies instead of one. But I believe both of them worthwhile spending some time with them because they can provide good income opportunities for us. All right. So before we start with companies, let's have a look at Dow Jones. Remember last time when we had a masterclass, it was here. So at that time, that's weekly charts. Each candle represents 1 week. So and it was right here. And we were thinking, okay, is it going to go back to slow line or is it going to continue in the fast line and reach the target? And target was this long trend line, like resistance line, which lasts from 2008. And look what happened. It eventually went to that line, and you see a couple of weeks, it's actually stopped there and went down. And at the moment, it's like a doji here, like weekly chart. We see all indicators are overcooked. So if we base our decision indicators, we understand that it's overbought situation, and it's quite possible that we can see the pullback on the market. Okay, it's quite possible, maybe even today, tomorrow, day after tomorrow. So we can see this move happen. So already, actually, last night the market was moving down, so we can expect it. So be aware of that, and let's have a look at the close period. That's what we can see. Okay, that's where we were last month. Okay, and no, actually here somewhere. And interesting enough that if you analyze charts and you can see the kind of level, and when the stock breaks through the level and tests it, and if it stays above this level, like technical analysts, they would say most likely it is going to go up. And if it stays and testing this level under the level, most likely it's going to go down. It's like here, you see, it was under it and then it went lower. Okay, here just hovering over it and then it moved up, reached the resistance line, and now it's flat. For the last couple of weeks, it's flat. We can see the MACD, RSI, stochastic, everything is already started going down a bit, but it's here still flat. We can say like maybe this top is a bit lower than this top, but still it might go higher. That's Dow Jones. That's the index representing 30 biggest companies in the stock market. Why do we need to know where indexes are? Because if the market as a whole goes down, we can expect that our companies also most likely will go down. And let's have a look how much we can expect the market go down. Now, if you see now it's 20,916, and that's the middle kind of level. So first level of support will be here around 20,000. So it means 900 will go down. So 900, if you divide by 20,000 and 900, it would be about 4.5, maybe nearly 5%. Okay, so we can expect that market can easily pull back 5%. So it's like correction. Now, it also can go to about 1850. So in this case, we will have what? About 2,400 move down. So it's about what? About 12% move. It's still correction. If the stock goes down more than 20%, we are talking about bear market. But if it is less than 20%, it's a correction. And correction happens every year. We can see it. For example, here we can see correction in 2016. It was about 15% here. Okay, and after that we can see it's moved up. And every year we can find something like that. Okay, so now we're at the peak point. We actually were quite a few times at peak points during the last year, and every time it goes higher and higher when you think it's going to go crash down, but then look at this, another high. So that's what we can see right now. Now that's S&P 500. Similar situation. I didn't show you a long-term trend, but it's similar to Dow Jones, and that's what we can see. 1, 2, 3, and we're on the top of third wave. And also we can see that's kind of a small wave 1, and it's kind of in the middle of second wave. So we can see it's parallel, maybe a bit slowing down, kind of going down, and we can expect maybe it's be there, maybe to do a few waves, short waves, and then it might go and pull back also to about 2,250. So and now it's 2,370. So it's 100 and we'll say 20 points down, which is a bit more than 5%. So we can expect if the S&P goes about 5-7% down, it's still okay, and it doesn't mean that something bad happened. But remember, your stocks might go 5 to 7% too. Some of them would go more down, some of them less. But in general, that's what you can expect. Okay, and if we see Compaq, so it's Nasdaq, we can see it's a bit different story. So also 1, 2, 3 wave, but then it broke that resistance level. You see, and it's went higher, and now it's over that resistance level. And at the moment, it's the highest point, so it's that's a parallel line. And for the last 3 days, it's kind of holding this level, so it doesn't go higher than the highest point, which was a couple of weeks ago. If it breaks through, it might continue this uptrend, so it goes to around 6,000, sorry. But if it like hold this level, it might pull back, and if it tested that line, that resistance level, it might come back to the previous trend line, and also it can have pullback, a correction to 5,400, okay, which is about 450, which is actually bigger. So it's nearly like 9% compared with the previous two indexes. Okay, so if your companies are included in the Nasdaq, you can expect that company have a higher correction rate. Okay.